Good morning, friends. 11:08 London time, UK time. Welcome, welcome, welcome to another recording, another session's mapping. There is some cool music in the background playing, so yeah, let's enjoy some of the cool vibes in the morning and allow me to go over the charts to all of you. If you are not familiar with the terminologies, I will be repeating the same sort of terms to mark out and explain pretty much how all of this has played out. As you can see that my charts are very clean. Chart hygiene is important. This recording may lengthen towards 10, 15, 20 minutes range, maybe 15 minutes or so. I will just cover in this recording unresolved inventory which has been left behind by sessions, and what these are. Okay, so these are the delta candles which I've marked out from the high to the low, and I'm using a transparent rectangle. So for Asia is in blue, London's in red, New York is in black. FYI, all of this is manually all put together. Okay, so all the drawings have been put together manually by myself. The candles are in black. If you go to the settings and you can change the candles to black, I highly recommend. Wicks, candles, all of that good stuff. My favorite tools are over here. Highlight tool. So you go to the left hand side and you pick out hand select, really and truly. Hand select all of the powerful tooling systems that we are going to be using. Now, Asia's in blue, London's in red, New York's in black. You can change it if you would like to. I've kept this set up for about 6-7 years now, around 6 years. I've spent 10 years in the market, coming into 11 years now actually, moving into 11 years. So a lot of experience in the bucket to share. How I look at the markets, my different lenses, which I've cultivated over time, and I'm happy to share with all of you. So let's begin with how I look at the markets. Now, I map out in the morning Asia, London, and New York. So I start from yesterday. If I've missed New York session, then in the morning, like now, I'll mark out the high, I'll mark out the low, I'll get the reference tool, I'll mark out the reference point, and then I'll look at what Asia's done. Some of the systems that I use will be session to session, delta, inventory playbook, delta playbook, non-delta playbook. I use the footprint charts on a daily basis to monitor the real volume, which is the buyers and sellers, bids and asks, and the difference in that space. Okay, please do some research and some studies on the footprint charts. It does help, it does assist. I've got a very unique approach to how I look at the footprint charts, which I will share later down the road via videos, one-to-ones, or even in person. Now, the way all of this is printed is based off time, price, opportunity, space. Every single session that is printed, Asia, London, New York, all three sessions, which obviously work in some sort of chain, they leave unresolved inventory. Okay, so each session is obliged to facilitate the auction market by providing best bids and best quotes. Now, if we look at just pure candlesticks pure price action, we need to be very careful how we how we create this image of what the session should do and what the session is actually doing. Okay, so my whole philosophy here is that you try your ultimate best, yeah, in having the ability. Obviously, you you work in real time. This is time sensitive environment. So, you want to work towards having the ability to read the market truth. And the market truth is the overall move. Okay. So, when you understand that, you will have to stop working towards forecasting and guessing and trying to predict. You have to remove these terms from your vocab completely. The approach that I have here is very mechanical, which obviously took some, it took a while to have that mechanical approach. So when you look at my charts here, what do you see? Well, we see Asia short. You can see Asia high, Asia low, Asia down, right? Yeah. This is Asia's short inventory, London's short inventory, New York's short inventory. By just looking at this, without zooming into sessions, you can see that all three sessions, yeah, pushed to the downside. Okay, we had, session to session inverses inside. Okay, so you can see here push, pull, push, pull, push, pull, push, pull, push, pull, push, and then push, pull. So miniature drive. So drive 1, push, drive 2, push, drive 3, push, final drive, push. What do you see over here? Asia and Asia inverse. London and London inverse. When you move over to Asia and London inverse, it's gonna be it needs to be statistically backed in terms of how accurate is the Asia and London inverse. How accurate is New York and Asia inverse? How accurate is London and London, continuation? The accuracy behind Asia and London continuation. So that is the sort of approach you should be looking at. That not everything in the market is gonna be certain. You are gonna see, Asia and London continuation, London and New York continuation, and then things will switch from New York and Asia inverse. And now, it could be New York, apologies, it could be Asia and London continuation, or it could be Asia and London inverse. Okay? I wanted to bring this forward so that when you do look at the markets, you are not fixated towards just one scenario and one narrative. You have to be really open. Okay? Now, you understand the bigger picture now, okay? That the market is full of inefficiencies and it's not guaranteed inverses, it's not guaranteed continuations, it's full of ups and downs. Okay, now how do we approach the market with full certainty and make sure we have the best of the best, high probability, A plus clarity, and the ability to read the truth? Because it's not about predicting or guessing, it's about having the ability to read the market truth. So over some time, I've been doing some work behind the scenes, and I've come to a conclusion, and I've come to almost I know I can't say it's 100%, but we can allow the market to reveal the truth and speak for itself. So I've come extremely close to piecing all of this, and for those that have been following me for quite a while, you guys know I have been really on point in the markets. in terms of being able to read the market truth and being able to follow it, you know, side by side. So what I've done over here is I've looked at session to session inverses. I've then zoomed into, as an example, Asia, and I've found that every session prints first high and first low. When that is printed, we have the breaches. When the breaches are printed, I have built something behind the scenes, which is combining the footprint charts, combining a specific delta candle, and essentially it's just it's two models. We have the delta model and we have the non-delta model, which sits inside a session. So if you look over here, this is Asia's delta 1215. This is Asia's delta model. Asia is a delta model. New York is a delta model. London is a delta model. Asia is a delta model. List goes on, 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 and on. Friday the 29th of May is a non-Asian delta model. Okay, so is New York over here. Alright. So now that we know that there are two models, delta model and non-delta model, okay, we know that the market only moves in two directions, one at a time, up or down. So we have a delta model and we have a non-delta model. Now the delta model is where we have the opposing liquidity, okay, which we'll have to use the footprint charts to find that delta candle, and I'll go into all of this properly, and how the first high of the session, the first low of the session, and the breaches plus the delta all work together to build, because essentially it brings you closer to being able to read the market truth. And it's a skill. Having the ability to read this is a skill. Okay, so it's a mechanical approach because the market is mechanical. Okay, candle moves up, candle moves down. All of this is mechanical. Okay, all of this is not real. This is mechanical, technical stuff. Okay, what you're looking at right now is a candle through a screen. Okay, so it's a technical stuff. So you must have a mechanical approach. Session, first low, first high, breaches, delta. Cool. We have 1, 2, 3, 4, 5, 6 points over here to look into. Make a note of that if you haven't. And then I will go into how all of that pieces together. So the current session here, as an example, I think the perfect example will be here. Previous session. Previous session prints first high. Make a note of every single first high, first low, and the breaches. So the previous session prints first high at 23.45, 0000. How do you map out the first high? For that, you have to zoom in to session opening and wait for the candles to print. The first two candles that print flat bodies to the upside, that is going to be your first session high, not your standard low session or standard high, your first session high. If you look over here, 23.45 and 12 o'clock, that's your first session high. In the same manner, vice versa, first session low, two flat bodies to the downside. You want to make a note of this and go step by step. Mechanical approach. Trust me, when you piece all of this together, you will understand exactly why I've been super accurate with taking these trades, and then you can work your way towards getting up in the morning, mapping out Asia, and then waiting for London to reveal the true intent. By the way, I'm risk free over here. We were floating 117 pips, risk free. I took this trade from the lows over here. The current session's first low sits at 8.15. Flat bodies to the downside. The breach 1 to the downside, 8.30. The breach 2 to the downside, 9 o'clock. Delta is printed at 9 o'clock. The 9 o'clock candle sits over here. Bearish candle, bullish delta. We have buy side liquidity, which we have for the current session. Now, this is a delta play, so both of the models have discovery phases. Whatever the previous session does, the current session can only do the opposite once price revisits the delta candle after the discovery phase. Okay, the discovery phase is going to be in the same direction of the previous session. So previous session in this case is long Asia. So London inherits Asia's inventory, which is long. You have to wait for all of the breaches to be printed. Now, the first low will print 2 breaches to the downside. The first high will print 2 breaches to the downside. If Asia is up long inventory, vice versa. When you see the first low being printed, the first high being printed, the downside breaches, and the delta, the low remains protected, you can take the trade into discovery. If price is already in discovery, you wait for price to return to the delta, and then you can obviously observe the engagement, allocate exposure, take the trades towards Asia low. I hope that makes sense. Okay, the delta is over here. We are in a delta model play, so it's a delta play right now, and the low remains protected. Okay, vice versa. You know, once price goes into discovery, yeah, first low printed, upside breaches pending. Once the upside breaches have been printed, price must revisit the delta candle if it genuinely wants to, complete the Asia and London inverse. If price doesn't want to complete the Asia and London inverse, then the discovery into the discovery continuation will follow. So that's what we are working around over here. We are working around delta model and non-delta model. I mean, this doesn't get any clearer. If you look at Asia over here, a perfect example because I traded Asia. I'm also going to show you how to use the fib. Very, very handy tool. You take the fib from the previous session low and previous session high. The 1.80 and the 1.27 is the level and the reaction point to look into. Very useful tool, by the way. So yeah, these are very powerful tooling systems that I'm presenting to all of you. Practice it, take some time out, go back in time, have a look. You need to have the same setup. Look at the beauty over here. Asian session mechanical approach. We have Asia's first high, Asia's first low. Delta is printed at 12.15. Price prints that breach 1, breach 2, exchange, Shanghai exchange opens at 2 o'clock. We stab the delta low and then we clear New York high. We clear Asia high. And then here we are. Asia sets itself up for the Asia and London inverse. However, the inverse is not going to just happen without the discovery being completed. Okay. And you can also take the advantage of the continuation if that is the true market intent. Okay. And then you start working your way into unresolved inventory. Now, London over here, Wednesday, which was yesterday, left upside breaches. The first low was printed, but the breach 1 and breach 2 wasn't printed. So this session, okay, unresolved inventory. This is why Asia chased it. Similar behavior over here. Asia prints its first high at 430 and 445. It's a delta model, but the upside breaches were pending in order to go lower. So Asia unresolved inventory. And when you start to understand that in order to go higher, downside breaches are pending. In order to go lower, upside breaches are pending. You will see how the session to session inverses are not going to come through. But instead, the mechanical ways of trading is the only way that's going to, be revealed. Because if you look at the first low, 815, first high, 815, 830, we see that we've got the first low, first high. The first high is over here. We have downside breaches pending. We have breach 1 and breach 2 pending. But the micro breaches have been printed. Okay, like body closures. We need a full wick closure below. Full body closure below the wicks. Delta printed. We also have upside discovery pending. So when you start to understand this, you will see. If I was to go over a few of the trades that I first started recording, the delta trades, I have to go back in time and I'm going to show all of you the beauty behind and just how the approach is going to help you save a lot of money, save a lot of time, and in general, this is a piece of me which I've combined, over the space of 10 years. I can never go back anymore. This is all I have, and I can only go forward and push myself. So I just want to show a few of the first trades. How far are we? 31. So let's go. A few of the first trades, and you'll see the huge difference in price delivery and market analysis. That was BTC, so I forget BTC. Let's look at it. So gold. So Asia long. Okay, Asia long. Where's the delta, by the way? Yeah. So Asia long. Okay. London to do the opposite of Asia. Once delta is printed, discovery is also, sometimes what happens is, if you look over here, the discovery was printed first. Price comes back, prints the discovery to the downside. Delta gets printed slightly later on. Okay. Delta gets printed slightly later on. NY, pre-NY tap, push. Now we've got London and New York inverse. Look at how London has positioned itself. It's positioned itself to the downside, so New York can inherit London's downside, inventory, and that works perfectly with Asia and London inverse, because now New York doesn't have to just, push higher, because in order to push higher, it needs to print the first low, first high, and the breaches. So that gives New York the advantage to push lower and print its required, conditions before it starts to rotate. And that also completes the Asia and London inverse, delta tap. And that was just shy of 500 pip move. So yeah, even here as well. So let's look at the second scenario. We've got Asia down. Obviously, we are trying to trade that Asia and London inverse. Delta was printed slightly earlier, at the start of the session. We get we get the discovery. Okay, we get the breach 1 and breach 2 below the delta, and then price stays above the delta, and then push into, and London handled this alone, which was a 400 pip move. So London took care of that session alone, and these were clean Asia and London inverse trades. Okay, over here we had a Asia and London continuation. The delta, and this is where I started to really understand the continuation side of the things behind the delta model. Okay, it's not always Asia and London. Yeah, this was slightly late, but you know, if you focus here, you will see Asia down. London obviously respects Asia high because the delta was printed, the discovery was pending below the first high, and the first high was printed slightly late. So the first high was printed over here. New York opens, prints that breach 1, breach 2, taps the delta low, and then pushes. You see? So yeah, you know, good moves, very good moves. You know, huge moves. Asia and London delta, tap 1, tap 2, discovery complete, breach high, first high, downside breach 1, 2, push into Asia low. This was a almost 600 pips. So I've logged 157 trades so far, which are simply the delta and non-delta model trades. They all include losses. They include all the wins. The losses are pretty much journals to see, pretty much data collection. You know, I'm collecting all of this piece of information, and I'm reverse engineering and seeing how the model plays out and how sessions are carrying this sort of chain, you know, back and forth. And once it stacks up, you can see over here, for example, you know, Asia long, London prints the first high, prints the delta. The discovery hasn't happened, okay, but we had the micro breaches, so you have to also understand that as well. Delta high gets respected, 1, 2, push, and you can see same scenario, right? You can see how London has positioned itself to the downside, passing over to New York. Now, New York can't just, you know, force raid London high. New York cannot just simply do the opposite of London. It needs to print the first low, first high, breaches and delta. Look at this. New York opens, pushes lower. While it's pushing lower, the delta high, yeah, that response is obviously coming into light, and you can see how New York is completing New York is completing London's inventory transfer by clearing the Asia and London inverse. So New York is completing Asia and London inverse, you know, on behalf of London, you know, and you can see it, right? Very simple. And then we obviously, you know, New York leaves unresolved inventory. It couldn't complete the London and New York inverse because it had a different responsibility. Now we have New York and Asia inverse. Asia needs to print first low, first high, delta before it starts to rotate higher. So now Asia leaves unresolved inventory. You see how all this is playing out, you know? So if you can hold these shorts and then use the shorts as hedge exposures to take longs when, you know, it's applicable. So I hope this is starting to make sense to all of you, my friends. 30 minutes into one of the best recordings I've ever done in my life. You know, where I've cleared up how the market really moves. And you know, if you're still watching this, well done to you, because I need you to now focus on the delta model and the non-delta model, and have this set up. Look at this. This is clean. This is so clean. Look at this. This is so clean. Asia low marked as reference point. Asia high left behind as a reference point because the high was printed first. Whatever the session prints first, the high or the low, you mark that out. If you look over here, New York high was printed first, so Asia to chase it. Now Asia cannot simply chase it without the required conditions, and the required conditions are first low to be printed, downside breaches, and when you understand this, you will see how you have to wait for the first low, you have to wait for the first high, and if you don't wait for the first low, you can't really trade it because the market is telling you that it's still in that discovery phase. Okay, so this the baseline of being able to wait and having the ability to train yourself, because it's a skill set to train yourself while having the ability to train yourself, and while building that ability as well to read the market truth. So it's a whole different ball game now. Okay, get with it, stay with me, stay on top of this, and you will be able to swing these shorts, longs when the market is consolidating on the major time frame, higher time frames, 4 hourly and daily. You can maneuver you can navigate yourself into this Asia and London swings inside of a huge sort of boundary from here to here. Okay, you can hold 1,000 pip shorts, and you can long buy 1,000 pip trades and hold them, and then hedge inside of these sessions. So have the ability to read the market like this. Okay, download the Atas platform. I'll leave the link below the description. Download the Atas platform. Yeah, watch my videos, gain some clarity, ask me some questions if you have any questions. I will get back to you right away because we have time. We have time, and the market is giving us the time to wait. First low is printed, breach 1 is printed, and breach 2 is printed. If a session leaves downside, so for example, you see how London left upside breaches over here? Asia prints that breach 1 and breach 2 on behalf of London. You can use the breach 2, which will be the location marker as well. That breach 2 is going to be pretty much the anchor that marks out the inventory which has been resolved. So you get that breach 2. Okay, cool, inventory resolved, sweet, done and dusted. Now let's move on. What's next? Looking over here right now, we have the first low, breach 1. In order for this delta to be used to go lower, we need one more breach, and then price needs to come back. So what we can do is we can hold the longs and then take shorts, okay, once that final breach is printed, and then allow the market to do its thing. Clearance, my friends. We need clearance from the market. We need reassurance. We need guarantee. We need clarity. We need all sorts. Okay. Be good to yourself. I'm gonna leave it there. Shall I just go over the 4 hourly quickly? If it's gonna benefit you in any shape or way. Look at the 4 hourly. Very same outlook. Yeah. Marked at the weekly high, weekly low. The delta as well. So I've also got a weekly delta marked out here. First low, breach 1, breach 2. Very same mechanics. Nothing changes. Same approach. The 15-minute. Yeah. Micro fluctuation. 4 hourly. This is a mother fluctuation over here. The daily, same thing. You can see same mechanics. Weekly, same thing. Quarterly basis, quarterly. If you look at this, this is quarter 1, quarter 2. Quarter 2 is about to end in July. Jan, Feb, March, April, May, June. Q3, June, Jan, Feb, March, April, May, June, July, August, September. Okay. So yeah, I hope you found this video very handy and useful. Please rewatch it as many times as you wish. I am writing up a playbook as we speak. Okay. And this recording will stay in the Discord handle as unlisted. It won't be public, just to put it out there. And if I have sent you this link, then it's a gift or just out of love. And yeah, welcome to tier 1 session raids, my friends. I'll continue to journal. I'll continue to post as many continuous auction recordings over here so that you can have a look and keep it going. Thank you very much. Have a lovely day. Stay safe. Be good to yourself.